This video is brought to you by Anvil Vault Breakers. Stick around to hear more about the video game. Okay, today I want to talk about the greatest financial scam in human history, which is cryptocurrency. The reason for this video is pretty simple, but it also requires a little bit of context. I have been trading cryptocurrency since early to mid 2013-ish. I was in college at the time, and I firmly believed that the technology on display had the potential to revolutionize multiple industries worldwide. I was the kid in class that wouldn't stop talking about Bitcoin back then. I still believe that even now, the technology bit that is, but the reality of what cryptocurrency has become is honestly sickening. Crypto is now a global atrocity that is being promoted in various different forms by everyone from Hollywood celebrities to multi-billion-dollar companies during the Super Bowl. Adaptations of cryptocurrency are being advertised as the solution to worldwide poverty or the next phase of global banking. Some of the more conservative claims, like applications in medicine, might be true, or the potential for a distributed immutable ledger to redefine accounting, for example. But the broader cryptocurrency space has become a horrifying example of wealth redistribution in a way that radically contradicts current public perception. When I say wealth redistribution, almost everyone watching this will think of it in one particular direction. They think of the political definition. Individuals with high net asset worth are having those assets redistributed to peers with a lower amount. That is easily the most common perception of the term. In crypto, there is an image of sorts, and that image, for some reason, has become rather mainstream. The image is of opportunity, accessible fortunes, that kind of stuff. It is an image of wealth redistribution and upward mobility. But the reality of crypto is that our common perception is actually completely backwards. Cryptocurrency is a wealth redistribution mechanism that takes from the poor and gives to the rich. There are obviously exceptions here. That claim is not, strictly speaking, universally true, but the exception proves the rule. And today I would like to make the claim that Bitcoin, Ethereum, and many thousands of other crypto projects are a mechanism that has done far more harm than good and extracted trillions of dollars from average citizens around the globe. More and more, I've been seeing articles, blog posts, commercials, and promos for crypto. Buy it here, trade it there, don't miss the bus, try this card to the moon, etc., etc. But alongside this kind of standard FOMO generation tactic, there is something far more sinister. Layered inside the gushing praise of all things crypto is a central idea. Crypto can alleviate global poverty. This idea is replicated all over now, often emulated by some of the richest and most influential people alive, but this idea is a lie. Okay, before going any further, it's time for today's sponsor, and this time it's a video game. Now, the ratio of game sponsors that I get versus the ones I actually accept is probably about 10 to 1. Most of those games are pay to win, mobile titles, or NFT crypto stuff, so it's a no-brainer, but today I want to talk about Anvil Vault Breakers. First thing to say, this game is extremely difficult. For me, that's a pretty big positive, but keep it in mind for everyone else. Anvil is a roguelike, top-down action game where you play as one of 12 different vault breakers and progress through action-packed alien galaxies. The game supports co-op between Xbox and Steam and features randomized loot to buy randomized upgrades, building an ever-expanding arsenal of skills and gear. It is currently in early access with a new season in March of 2022 that will add a brand new gameplay mode as well as an additional vault breaker. I have, on a personal level here, a great deal of fun with this title, which may be a function of my natural affinity for top-down ARPGs, roguelikes, and difficult games, but all things considered, it's a sponsor I'm happy to accept. The game has a definite grind to it. Progress is reset when new seasons launch, and there is a clear stratification in gameplay where meta mechanics are by far superior, but I find myself enjoying it very much, and thus, again, happy to accept the sponsor. If you want to check it out on Steam, there's a link down below in the description. Keep in mind it is an early access title that can also be found on Xbox Game Pass. Big thank you to Anvil for sponsoring the channel. The first thing to examine, as we really get started, is the absolute explosion of ICOs. An ICO, also known as an initial coin offering, is basically the same thing as an IPO, initial public offering, which companies will execute in order to trade on public stock markets. These two mechanisms of raising capital are virtually identical in concept, save one key factor. ICOs are totally and completely unregulated. During 2017 and 2018, there was a massive surge in the number of companies that decided to list these types of tokens. And in the years afterward, we were able to see in real time just how catastrophic the crypto world has become. Let's take an example here. This is Substratum. Substratum was originally intended to be a decentralized internet. Their goal was to mitigate the world of net neutrality and online censorship, but Substratum was responsible for the destruction of over $1 billion. In early 2018, the price began to skyrocket as capital poured into the entire crypto market, and on January 8th, it hit a peak price at nearly $3 per token. But immediately after, the price came tumbling back down, and now sits at a fraction of a penny. If you take the apex price tag for substratum and multiply it by the circulating supply, you get $1.1 billion. This might not be a perfect figure owing to the fact that a circulating supply can fluctuate, but from its peak, substratum has destroyed over $1 billion in value because those tokens, they still exist. Many people who bought in, whatever their cost basis might have been, are now stuck with a token that is worthless and, mostly speaking, untradeable, since it was delisted from almost every single exchange on the entire market. Substratum was a mechanism whereby investors bought Bitcoin with fiat currency and then exchanged that Bitcoin for substratum, which then centralized a large portion of Bitcoin, while substratum eventually became nothing more than digital waste. ICOs effectively do or did one of two things. Either A, they centralized Bitcoin or Ethereum or whatever exchange token was used to make the purchase, or B, usually both, they wiped out value for investors. Here's another example. DentaCoin. DentaCoin was supposed to revolutionize the entire dental industry, and you'll see that there's a common theme here where they'll just pick the real estate market, the medical marijuana market, anything, literally any other industry, and say that blockchain is going to revolutionize it, and then they do an ICO. But so DentaCoin, soon after launch, it began trading at heights of 0.005, right? So half a penny. That might seem small, but we also need to realize that there are over 500 billion DentaCoins in circulation with 7 trillion in total supply. If you multiply the peak US dollar price tag by the circulating supply, you get 2.5 billion. Between DentaCoin and Substratum, just two projects, from their all-time high, that is $3.6 billion in value wiped out. Now, this is an imperfect summary because there's actually a lot more that goes into the calculation of how much money was truly lost, but hopefully it's starting to make sense that the ICO boom has some bad investment propositions. However, we need to expand on that because any market has some bad investments, and that doesn't necessarily reflect on the entire space. Well, for crypto, it kind of does. According to a machine learning analysis in October of 2021, all of this research will be linked down below for reference, by the way, in the description. When analyzing comprehensive data for 305 ICO projects as a sample size, 47% of them were dead. Now, when I say dead, I mean that they were classified as a scam by the organization because their communication had ceased and the token had been delisted from major platforms. That is nearly half of their sample size, resulting in a total loss for investors. Furthermore, this study was only able to get ICO documents based on a previous study which focused on, quote, successful projects, which was defined as an ICO that raised in excess of $1 million. That particular study was aimed at the investor side of things, which would actually stack the deck in favor of projects deemed to be more legitimate. For our purpose, that makes it even more damning. Half of the projects measured, deemed to be successful projects by investors and raising in excess of $1 million each, are now dead, which means 150 million bare minimum in flat-out losses, just from this tiny little sample size. But the reality is actually far, far worse. According to data from Deloitte Insights, a business analytics firm, only 8% of all open source blockchain projects were still active in 2017. Active is defined as an update in the past 6 months by them. And according to Wall Street Journal research, out of 1,450 ICO reports, 271 contained indications of fraud and or plagiarism. There were missing or falsified executive teams, dead-end contact forms, and a myriad of other warning signs that would seem to reinforce the idea that these ICOs on a general industry-wide level were and are a disaster. So why does this matter, and how does it indicate that cryptocurrency is the greatest financial scam in history? All alone, it doesn't necessarily, but in combination with a few other specific realizations, it might. The next thing we need to look at is the Gini coefficient. This is where I'll need to summarize rather than go in depth, but again, sources are all linked down below. The Gini coefficient, or Gini index, is a tool for measuring income and wealth inequality across a population. On a scale of 0, 0 being every person earns and has exactly the same amount of money, and 1, where there is absolute inequality, as in one person earns and has 100% of the money, while everyone else has 0, it is used to show relative wage and wealth gaps in different countries. For example, in 2022, various South African countries had Gini coefficients of 0.6 or 0.5. These are the areas with the most unequal wealth distribution on the planet. But let's go even further. In North Korea, a totalitarian dictatorship which runs on a command economy and has wealth distribution so extreme there is modern-day serfdom, the Gini coefficient is estimated to be about 0.86. This is very rough data based on testimony from about 700 refugees, and it refers to 2003, by the way, so take that for what you will. It's hard to get any legitimate data out of North Korea in the first place, but that is by far the most extreme example of wealth inequality within any nation on Earth. As a final example, the United States is at about 0.4 on the scale, and is often regarded as an extreme example of income and wealth inequality on the global stage. 0.4 is much more reasonable, however, than 0.86. Keep in mind that Bitcoin and cryptocurrency is being heralded as a method of alleviating global poverty and is widely regarded by the public as a disruptive force in the global financial system that will radically alter or even cure wealth and income inequality. Also keep in mind that the command economy of North Korea, with modern serfdom as a result, has a Gini coefficient of around 0.86. According to all of the data I could find, preprint studies, peer-reviewed studies, business analytics, and university papers, Bitcoin has a fluctuating Gini index rating of roughly 0.8, while Ethereum has a Gini index rating, on average, above 0.9. ICO tokens, they're even worse, though a consensus is not easy to find, and nearly every single source has different data. But even among the whales of the cryptocurrency space, there is an incredibly unequal distribution. This means one thing and one thing only: widespread adoption of networks, tokens, and currencies on the blockchain as it stands today simply stratifies the population even further on a wealth inequality basis, which is the antithesis of what popular crypto fanaticism would have you believe. The greater the value of the crypto asset, the greater the gap between rich and poor, even beyond the threshold of war-torn countries, dictatorships, and late-stage capitalism. Financial exploitation has existed since the inception of money itself, but cryptocurrency is almost nearly purpose-built to exacerbate those problems. Decentralization is a selling point of the technology, yet companies centralize tokens every single day and execute the exact same financial manipulation as traditional markets. Is there a difference? Yes, but that difference is accountability and tax avoidance. Cryptocurrency takes all the worst things about modern finance and just reinforces them, while somehow tricking the population into thinking it is the opposite of reality. Once in a while, one of the Ponzi schemes or the con rings will fly too close to the sun and get burned, like Icarus, but most of them operate with complete protection as the stratification of wealth is accelerated. Also, Icarus had his wings melt off, he didn't necessarily get burned, but it's the same type of thing. They go too close to the sun and they fall as a result. Trillions of dollars have been lost or relocated through crypto so far in a direction that completely contradicts the public image of the industry, and yet people don't seem to know or care. In a 2017 study, over half of the transactions attributed to Bitcoin's meteoric rise came from one single entity on one single exchange. Researchers openly stated that these transactions were so far outside the realm of regular trading patterns, it was inconceivable that there was any other explanation except market manipulation. These transactions were made with a stablecoin called Tether, and Tether has been outed as a less than reputable and anything but stable company. First, it was claimed that Tether kept 1-to-1, $1 for every coin they minted. Then it came out that only 74% of their currency was actually backed. Then eventually, and most recently, it was acknowledged that only 3% is backed by actual dollars. The rest is backed by cash equivalents, which is a fancy way of saying not actual money. They also refuse, full stop, to allow third-party auditing of their books and systems in any capacity. This is a black box in the crypto world where one company is choosing how and when to print an unlimited amount of tokens, which are then being used to blatantly manipulate the market. Finally, it has begun to gain attention, but Tether is effectively the central bank of cryptocurrency. You know, the financial tech that is supposed to revolutionize the industry by avoiding the concept of centralized banking? Yeah, that one. Over 70% of all Bitcoin transactions utilize Tether, but Tether can't actually back up its currency in a pinch, and it quite literally says in their terms of service that they have no obligation whatsoever to redeem any of their Tether tokens for cash. Basically, there are now $78 billion of unbacked currency serving as a centralized bank for crypto through one company, as the technology facilitates all of the worst financial behavior that was already a problem before all this occurred, and exacerbates income inequality in particular to an extreme beyond anything else on planet Earth. Cryptocurrency is a funnel, and ultimately there can never be a positive result from the current market reality. Cryptocurrency is the greatest financial scam in human history, and it's only getting worse. For some people, it's an incredible opportunity, and there are a very, very small, limited number of legitimate projects that utilize the technology. But for the vast majority of all those involved, it's a terrible thing to be wrapped up in and should not be engaged with. Like I said, I've been watching and learning about the space since around 2013. I even recently had a friend over who is far more optimistic on the subject than I am, and we had some great conversations, we really did, and I understand why he thinks that. But my view is that the wider crypto industry is a severely dangerous, extremely detrimental investment. Borderline, it's just a giant scheme, and should be avoided in nearly all circumstances. That's it. If you want to support, there are links down below, primarily Patreon and locals. I'm trying to diversify away from ad revenue on YouTube. Also Odyssey, which is just a YouTube platform alternative where all my content can be found. There's another YouTuber to check out as well. Merchandise, social media, sponsor as well. There's a Steam link, etc., but I'll cut it there and stop rambling. As always, thank you all for watching, and have a nice night.